Alcidion Group, Andrew. Alcidion Group Limited, ASX, ALC, and we've had a lot of success in the first half of the show. This one, not so much.
When you're right 51% of the time, you're wrong 49% of the time.
You called them a buy at 10 cents. They are currently at 5 cents, so down 50%. These guys are in health data, right? Do we all just get healthier? Is that what happens here? You just don't need.
The quick version here is that they they provide software largely for hospitals and large health organizations. And the major client for them and the big lever of growth for them in recent years has been the NHS over in the UK.
Right.
And so sales going really well. Everything was on track. And of course, you're dealing with these very large bureaucratic institutions. I don't know if you've been following political and economic developments in the UK, but things are tight.
Oh, watching it like a hawk.
Oh, as you do. Everyone does. And so they've just had a whole bunch of contract delays. And it is so. Here's the two narratives. Choose your own adventure. One, management got ahead of themselves. They ramped up costs too much when it should have been apparent that these sales weren't going to come through. It was poorly managed. And not only that this isn't just a temporary one-off kind of thing, but there is a real structural shift in the underlying demand for this. The other narrative is that, well, we're a tiny little Australian ASX company that's dealing with a counterparty that's very slow to move, that's got massive budgetary constraints. We've still got the work. We've still got a huge amount of recurring revenue. We've still got a massive amount of opportunity. Not just us, but everyone in the sector pretty much has had the exact same impact. So it'd be different if they were singled out and yet every other supplier to the NHS was going great. But it's just been bad across the board. In other words, and now they're reining in their costs a little bit. We actually interviewed the CEO, Kate Quirk, last week. And that was her take was, take it for whatever it was worth. But we just had everything delay on us. But in terms of the 3 to 4 or 5 plus year outlook, nothing's changed whatsoever. So if you think that's the case, then this is the market giving you a gift. If you think there is something structurally wrong, no. You want to pass. I'm in the camp of I think that they are still okay, and I think the risk reward proposition is actually a little bit better. But it's a controversial take. I know a lot of people on Strawman don't like it, but I think it's interesting.
All right. Well, I'm going to choose that you're just making excuses.
Yes, that's sandbagged that one to all hell. Well, can I just iterate on that? I mean, this is the point I was trying to make with Catapult, and I'm not trying to say this would be Catapult, but if you're only excited and enthusiastic about your investment when the share price is up, you're going to miss potential opportunities like this. When everyone's negative, that's when I get more interested. Doesn't mean I'm right, but that's when I think you should be more interested, not less interested.
Okay.